PXS. PXS. Okay, so this is an oil tanker company that is out of Greece, and they are tiny. They have small tankers, and there are five. They have five tankers in total, and they are product tankers, and they are in the Mediterranean kind of medium range. They have an awful balance sheet, no cash, and enough debt that it's not pretty. And this is a newer kind of company, newer tankers, product tankers. And let's go see what this looks like. And I've been comparing the product tankers to like the big crude oil tankers and how those companies have been looking in the crash, and maybe a tricky play with product tankers coming up as all the crude tankers are full, and now product tankers are starting to, instead of transporting oil products, they're starting to just store crude because it's a better business this year, and they might get some up moves in these product companies. I mean, we saw Top Ships as another small product kind of company that looks bad, and Tops is American with a really monstrous debt. PXS doesn't have crazy debt like that, but they don't have any cash, and that doesn't seem to be a problem for anyone right now in the tanking industry. The tanker rates are so high that the bad balance sheets don't seem to be doing anything. Okay, so this company never had a super, I mean, they had this spike here, but they never had a long-term kind of high price. They're a newer company, and they've mostly, besides a couple of spikes, has sat around, $1 or so. So this company might be interesting for anyone that has $1 that they would like to invest in oil tankers. Let's just see what they've been doing during the crash here. Take this auto off. Let's get some lines going. Where are we? Okay, yeah, this is it. Okay, so this is a really spotty graph, and this one I think is going to be tricky to trade because I don't think there's a lot of trading volume. So I would be cautious on doing some kind of options or something on this thing because it might be hard to get back out of them. And then we have 5 here. Okay, so here's our stock market crash. We get a ABC Elliott wave down, then we get the 1, 2, 3, 4, 5 Elliott wave up, and we're starting to get a turnover on the 5 wave, and the oil tanker companies are all agreeing or turning over earlier before the S&P started turning over. And this is so this is a really interesting graph here because this looks like a very, very good product tanker graph where all of the product tankers started to crash with the crash because they are a transport company, and transport is really bad business right now. Like all the cargo ship companies are terrible right now. All the chemical and natural gas tanker kind of companies are crashing, but product tankers, as we found out from, what was her name? Barbara Troner with S&P Global Platts, who's interviewing a bunch of the oil tanker managers from around the world and from America. The managers are saying now the product tankers that usually ship refined petroleum are now starting to hold crude oil storage because that's the big business this year with the oil crash, the oil oversupply, the contango, all of that. And daily oil rental rates on these tankers is super high, and it's a much better business to just store oil, just storage, because there's no storage for all this extra oil. So this one actually looks great, and we get off the bottom. Actually, it gets a hypey kind of reversal during the bottom, which I haven't seen on any of the other charts. Oh no, this is just the up here. The crash is here. Here, modify this S&P chart slightly. The crash is here, and this is the bottom. So they just had a resistant bottom to the crash, and then you get the double up on the bull trap with the double top. And it did not get a hypey parabolic crazy thing. It gets the similar shape to the S&P on the up, but this is after the dead cat. This has been a net long, and that's what we're seeing in the product tankers. Is the beginning of the crash they pulled down to some point, And then after that point, I think they are switching to crude oil storage and they're getting an up. And this one looks pretty good. What are the numbers? So it went from 64 pennies to, yeah, 130-ish, but this is really where the top is, about 119. So it didn't quite go 2x, but it got pretty close. This is a really good rebound, and this is a tiny company that is interesting. It's Greek, and they have 5 tankers, and they're named like Alpha, Beta, Theta, Epsilon, and Malo. And is that a Greek letter? I don't think so. I don't know what that means. So yeah, this is a Greek product tanker company with small tankers in the Mediterranean. And the Mediterranean companies are a little bit last to the party here, getting all this crude oil storage. And the product tanker companies are also late to the party because all the normal crude tankers are the ones that got all the oil first. And then let's look at the cycle. So we get a 3 to 4 month credit contraction cycle that we're in right now. And the S&P is doing this kind of down, bounce kind of maneuver that you see in a credit contraction cycle. And from the Elliott wave standpoint, we get the ABC correction wave off the top of the everything bubble. Then we get that 1, 2, 3, 4, 5 Elliott wave across the bull trap. And we're looking for another ABC correction wave down. And then if you look at this, you get a 1, 2, 3, 4, 5 wave right here on this small bull trap. You get a 1, 2, 3, 4, 5 on this one. We should expect a 1, 2, 3, 4, 5 on this one. And if you zoom out a little bit, you'll see that this entire thing is really just one bigger corrective wave that is just an A, B, C corrective Elliott wave. So you get these layered cycle inside of cycle, kind of Ray Dalio credit cycle kind of wave inside of a wave thing. And the Elliott waves fit perfectly into the credit contraction cycle. And then we'll get sort of the consolidation action where we'll see this reversal out of a credit contraction cycle into a monetary expansion growth phase. It looks like a growth phase still, even though people probably will doubt that it's going to be growth at that point. But the growth stats that I'm seeing now still point to a growth phase after this, and definitely an expansion phase. But even if it's an expansion with down growth, like a stagflation kind of phase, it's going to get a blast off the bottom. And this is a good look at exactly where these tankers have actually been positive. It's a net long here, but the tankers go down with every down movement in the S&P. And right now it looks like a down movement in the S&P. So I'm not touching any tankers for the next couple of weeks. There should be a little dead cat here, a little dead cat here, just like we got little dead cats in here and back tests. So kind of day trading and swing trading these little moves, and then definitely long the oil tankers and long gold on the next 5 wave bull trap. And the majority of the gains in these oil tanker stocks, and this is not financial advice, should be when you smash that like button right now to help me out with the YouTube algorithm. So these 5 waves here, the up movements, you can call it a bear market bounce if you want, or a bull trap, or just a B wave, or whatever you want to call it. That up movement is the majority of the gains in the tanker stocks for the entire rest of this cycle should be made in that move. And then you should be able to get some smaller swing trading gains here, and then down here, this consolidation zone could get absolutely wild and could be very, very crazy sort of day trading and swing trading, a super high volatility on the VIX and super wild movements before we get a switch out into a calmer, flatter kind of just expansion curve. So these credit contraction cycles are always nutty, and they're always bouncing and just aggressive, like jerking wave movements. And it's kind of fun if you like to draw waves because you get these really large size, very clean waves. It's very easy to do the wave kind of analysis on these. So that is a look at the PXS Tankers out of Greece, PXS, and that is a tiny tanker company in every sense of the word. and they are one of the product tanker companies that could see a late big move. Yeah, I think it's a pretty interesting one to look at. It didn't quite get the 2x bounce like like Nordic Tankers, or some of these tanker companies got like 100% increases on this move, but also you have to pay attention to where they started the up move. And if this company hasn't seen as big of a jump yet, it still might see the bigger jump down here, and that's what I'm thinking about with these tankers. And this goes in the short list of ones that look good, because the top ships, the TOPS tankers, did not make a good move. And then Scorpio, the STNG. Scorpio is one of the biggest refiner, product tankers fleets in the world. And also Maersk, but Maersk is all kinds of logistics and stuff. STNG Scorpio is actually just the tankers. And Scorpio is doing the same kind of thing. It's a late rebound. And I think these kind of tanker companies might get a bigger bounce here than the crude specific companies. And I'll be watching that pretty closely. And if you're looking for timing and price entry points on where to go long, well, one, I don't give financial advice. And two, I don't have time to go into the timing details on these charts. I have a ton of charts on the S&P where I track the cycles, and I look at targets, and I look at the whole market. But just in general, when the S&P goes up, these are going to go up. But these things are going to go up way, way more than the S&P goes up. So that's kind of the plan long with gold and oil tankers on the up moves. And for timing and targets, you got to go look at the other videos that talk about the cycles on the S&P, because you can draw really, really specific and clean models on the S&P charts. And these kind of charts follow the general shape, but the price targets are so much harder here. It's more has to do with the time targets and just the turnarounds and the waves than exact prices. So that is, and yeah, I think we had a target for like May 13 or something like that. I can't remember. Just go look at the S&P videos about Elliott waves and about all the videos that talk about crashes or bounces or Elliott waves or anything like that, or cycles. You'll see the movements and the time targets and the entries and stuff. And just the general idea that these tankers are now a general long, but not awesome as a long in a down movement. Just really good as a long in the up movement. So it's tricky. And I guess I could talk. I mean, you guys can go home now if you don't want to hear the rest of this, but I can talk about the oil contango and talk about the dividends and stuff like this, because I don't think this tiny stock is going to have dividends or anything like that long term. And I think like the kind of blue chip crude oil companies are going to keep storing crude for the next several years. We have probably 2 more months of contango and 2 more months of craziness right now. And we'll probably get like a 4-month kind of bounce out of here. Not that high. Down here somewhere. We'll get a bounce out of here anyways. And then we'll see. It looks like we're going to be setting up a longer term bear market. And I think oil tankers should be a pretty good look in the bear market, but probably not these. Like, I don't think the product tankers are going to be so good long term in the bear market. I think that the crude specific, very large tanker companies like Nordic Tankers, NAT, like double hull tankers, DHT, EuroNav, EURN, Teekay Tankers, TNK, all those crude specific big tanker companies are going to have a lot of business for a lot of years. And those are dividend paying stocks that should have a flat to upwards trajectory while the rest of the market is in a bear. And those could be really, really cool addition to a lot of portfolios. And I don't think the product tankers are going to be quite as awesome, because the oil storage situation right now is only going to be a couple of months, and then the product tankers are going to go back to product and to logistics kind of delivery services, which will be part of the bear market. And that's a longer term outlook at the contango, at the spot prices of oil right now being lower than the future prices of oil out, a couple months. But once we get out a couple of months, then that will no longer be the case. And then all of these tankers that are lined up outside of the ports in California and Texas and China, Hong Kong, Singapore, there's just all the tankers in the world are just lined up outside of these major oil ports, and they're just holding oil. They're not selling it right now because the price is so low, they lose money. And in 2 months, then you start unloading all of this oil, and there's a line of 30 oil tankers, and there's even more coming. They have new tankers coming out of Europe and the Middle East getting in line. Now the product tankers are filling up and getting in line. So this will be interesting to see how this unwinds and what tankers look like. And PXS, the tiny tanker company, looks good. The stock chart looks good on this one, and Top's stock chart does not look good right now, although they may be able to look good soon, but I don't trust them yet. And this one I do. I do trust this stock chart and this business model, and the STNG also for product tanker play instead of a straight crude company. I think these two are looking good, a giant one and a tiny one. So okay, that is good. All good. Enjoy. Please hit the like button. Happy trading.